Good afternoon, everyone so far. May Andrews and Mr. Taylor will be in charge of the session. Give them another minute or two and then they will tell me if they are ready so that we can start. Thanks everyone for attending so far. I must thank them because I think this is a brilliant idea. Thank you.
Thank you, Mr. Foshier.
Pleasure. See you on Tuesday for the grade 12 exams.
Yes. We are busy preparing learners now.
Thanks a lot. You do a wonderful job to our kids, all our accounting teachers.
Hello?
We are grateful for you all.
Mr. Valencia, hello.
Mr. Mkwati.
Yes, sir.
Thank you.
You are welcome in this meeting.
Baie dankie, baie dankie, meneer.
Please see you.
Thanks everyone. Hey, Afrikaans is nou kwatsie raak al hoe beter.
Sheba kopa re thule tlamele butleng pele.
Madonna e sa
De Futuma.
Just tell me when I must start.
Right, thanks everyone. I think there's two cameras who must be muted. I think it is Sparky and Lekugang, and then I think Leonida. Thanks a lot. I think you are presenting first and then James second. Hello James, we are ready for you.
That's the thing.
Hello Leonida, are you fine?
Can I start so long? Can I start?
Just before you start, Leonida, SS Sparky, Unifield,
Can't I do my
and
talk so long?
Lekulong. SS Sparky and Lekulong.
Good afternoon, ladies and gentlemen.
Afternoon, Leonida.
Good afternoon, ma'am.
Good afternoon, ladies and gentlemen. We apologize for the technical delay. We are busy with groundbreaking stuff here this afternoon. We are presenting over the whole Free State today, and that's a first for us. So forgive us a little bit of technical difficulties that we are having. Good afternoon to our grade 12 learners. Good afternoon to our teachers listening, our subject advisors, and all other interested parties listening to this broadcast this afternoon. Today, we're going to prepare or deal with the balance sheet and the income statement. This is in preparation for our test on the 21st of May that we are writing paper 1. Now, what to expect for paper 1? In paper 1, we normally have 4 questions. Question number 1 deals with your income statement and your balance sheet, or your statement of comprehensive income and statement of financial position. Question number 2 with your cash flow statement and your financial indicators. Question number 3 also deals with financial indicators, more like analysis of questions, either one company or 2 companies given to you. And question number 4 is then a 15-mark question that deals with corporate governance. Now, if you want to pass this paper, the best advice I can give you, work through past papers and make sure that you study your formats. For next Tuesday, we study the formats of the income statement, the balance sheet, the cash flow statement, your notes, you know them off by heart. Your financial indicators, I always say study your financial indicators, because we do get a formula sheet that you may use, but if you don't know the financial indicators, you will be lost in that financial, the sheet, the formula sheet. So remember, study, study, study. We don't have a study work in accounting, but we have to practice through past papers to make sure that we are prepared for the paper. And remember, your financial indicators, almost out of 150 marks, can be 40 to 50 marks. So do not do yourself a favor and make sure that you study those financial indicators. You have question number 1. We have 2 question number 1s. We're going to start with the first one, and then my co-presenter, Mr. Taylor, James Taylor, who is the chief marker in the Free State Province, he will be doing question number 2 with me today. So you will be allowed to ask questions in the chat through your teachers. The teachers can type it in. Mr. Taylor or myself will check, and then we will ask those questions. At the end, we will open so that everyone can also ask questions. We have an attendance register. It will be posted in the group chat by Mr. Mukwatsi. Please fill in those attendance registers. Per school, we don't need individual learners. A teacher can fill in, the teacher fills in the name of the school, name of the teacher, and the number of learners in the session or who have joined us this afternoon. If you are on your own at home also watching, that is also fine. You can also fill it in and tell us which school you are from and where you are watching from. So welcome to the session. Let's do this. The first question that we're going to deal with is question number 1, the one on Starlight Limited. Make sure you have that in front of you. We ask you to prepare the questions so that we can go faster through the question today. Okay, question number 1, statement of complete.
Right, colleagues, please, Leonera, sorry. Hey, mute, please, otherwise I will throw you out.
I always say, read all in college. We have independent auditor, critical employees, current liability, financial assets. Then you start thinking, what these things mean to you? And then you go to column B, you read investment such as a fixed deposit over a 3-year period. Which one is this? This is my financial asset. Then I already go to my 1.1. And I write A, right? B, debts to be settled within 12 months. What is this? This is a current liability. Then I already go to number 3 and I see my answer is B. A staff member of a company who set up effective internal control procedures. I know this is an internal auditor and is not on my list, so C will not be part of the right. Total of ordinary shareholders' equity and non-current liabilities. This is your capital employed, that will then be the answer for 2D. And then E, express unbiased opinion on the reliability of financial statements, which will then be number 1. You see, I did not go 1, 3 looking for the answer. I read the options in column A and then I read B and set them where they belong. That is 1.1. 1.2 Starlet Limited. Information relates to the financial year ended 28 February 2020. I always say highlight that 28 February 2023. The income statement is based on the concept of matching. Matching says you match an expense to the accounting period. If our accounting period is from the 1st of March to the 28th of February 2023, we are only interested in that financial period when you do the income statement. If it should have happened, then it falls within the accounting to add. If it falls outside the accounting period, you subtract as if it never happened. Right. So our first question, 2.1, refer to information B1. Calculate the value of the closing stock of light bulbs on 28 February 2023 using the weighted average method. Remember, weighted average stock is normally a paper 2 topic, but stock can also appear in paper 1, and we see it more and more, either as part of the income statement or as part of your balance sheet. So be prepared next week, go over your stock as well, right? Weighted average, study that formula, know it, right? Your opening stock, your units below the line, plus your purchases, your units for purchases, minus returns, minus your units for returns, plus your customs duties. There's no units linked to your customs duties, right? Then you divide it and you get your average price and you times it by your stock on hand. Now let's do that quickly. It's going to erase. Yes. Okay. All right, let's do this. It says go to B1. A stock count on 28 February 2023 revealed 2,774,800 rands worth of stock on hand. However, this figure excludes the closing stock figure for light bulbs. Note that the weighted average method is used to value the light bulbs. Remember, what do I need? I need opening stock and my units below the line. I need purchases and my units below the line. I need returns and my units plus my customs duties times my closing stock. Now let's see, my closing stock is 1,700. Let's find the opening. The stock on the 1st of March, that is my opening stock, 416,000. Plus my purchases, 3,478,000. One zero missing. All right. Then available for sale. These two added will give me that available for sale. 3,894,000, right? So I didn't have to add it, but just for showing you. Units below the line, my 416,000 was 8,000 units plus 47,000. There was no returns here, so we don't have to take returns into account. There was carriage on purchases plus 26,500. Okay. Once again, available for sale, 8,000 plus 47,000 will give me my 55,000, right? So I didn't have to do that. You must look out for things like that that can save you a little bit of time. Do the calculation. You did the calculation for me. Do the calculation. So you have your 3,894,000 divide by 55,000, and it gives us 70 rands and 80 cents. 70 rands and 80 cents times 1,700 times 1,700 gives us, just see, oh, I forgot my 27. Let's go back again. 3,894,000 plus 27,500 divide by 55,000, and it gives me 71.3. 71.3 times 1,700, and it gives me 121,210. That's then your first answer. Correct your work. Right. Okay, I hope you've all corrected your work and we can move on to the next one. One point two refer to information. 3.2, calculate the profit or loss on disposal of the vehicle. Remember also what depreciation can in paper 1 and as well as in paper 2. Profit and loss on the disposal of the vehicle, I always say if possible do the asset disposal account. Let's see what information they gave us that we can use. Fixed assets and depreciation. Vehicles, an old vehicle was sold for 91,500. I do my asset disposal account, so my selling price was 91,500 on 30 November 2022. The amount received was recorded, but no further entries were made. Details of the vehicle sold. Carrying value on 1 March, 104,000. Okay. Depreciation is 20% diminished balance. So this is already the diminished balance, right? And this vehicle was sold on the 30th of November. So we have to calculate how many months we had this vehicle so we can calculate the up-to-date depreciation. Remember, we're calculating the profit or loss on the disposal of the asset or the vehicle. So let's count quickly. We started on the 1st of March. So we have March, April, May, June, July, August, September, October, November. So we have 9 months, right? So this 104 is already the diminished balance. So if I want to calculate my up-to-date depreciation, it is 104,000 times 50 over 100 times 9 over 12. Okay, let's do the calculation. 104,000 times your 20% times 9 divided by 12. And it gives me 15,600. Okay. So 91,500, it was your selling price, right? 104,000 was the carrying value. So if I take this 15,600 here and I subtract it, then I'm going to calculate a new carrying value for this. So I'm going to say 104,000 minus 15,600. So my carry value now is 88,400, right? 88,400. So I sold it for 91,000. You can already see I'm making a profit, right? So I'm going to say 91,500 minus my 88,400 to get my profit or loss. But I can see it's a profit because I sold it for more than my carry value, right? So 91,500 minus 88,400, and it gives me the answer of 3,100. Okay, so what did we have to do here? We were given the selling price, we were given the carry value, right? The only thing we had to calculate was this 15,600 to get the up-to-date depreciation, right? They didn't give us the cost price here. We could calculate it with the information, but we could also work with what we have here. So the 91,500 minus the carry value of 88,400 is the answer of a profit of 3,100. Now, once you've calculated this profit, go now to your income statement and write it on your income statement under your income. Profit on the sale of assets, 3,100. Do that immediately. If you have ready, fine, just mark it in for yourself, right? So go to your income on the income statement, profit on the sale of asset, and then you write it there. Okay, I'll give you a few seconds to correct. Okay. Calculate total depreciation for the year. Remember, when you do depreciation, I always say you divide it into old, new, and disposal, right? For the vehicles, we already have disposal, which we calculated was at 15,600, right? In the previous calculation. And then still in bullet number 2, they say depreciation on the remaining vehicles is 145,200. So I don't have any further calculations, right? Then my equipment, there's no disposal, so I can just divide it into old and new. So let's do that. Old and new. I always do that. Let's see what they say. Equipment is depreciated at 15% per annum on cost. If I see cost, then I think immediately about the R1 rule. Always think about R1 rule, whether it's there or not. We think about R1 rule. What does R1 rule says? An asset cannot have a negative value. So when it comes to the end of its lifespan, we will allocate a value of R1. So you calculate the depreciation and then you take the carry value, let's say it's 30,000, minus that one, then that depreciation will be 29,999. Will it be here? I don't know. Let's find out quickly. Let's see. Equipment. Equipment at the beginning of the year, 4,000, right? The old ones were 774. And then they said to us, new equipment was bought on the 31st of July 2022. Now, 31st of July 2022, no further information. That's almost 7 months ago, which means it has already been recorded, right? So if you look at your new balance for 2023, it's 822,000. So take your 822,000 and minus your 774,000 there for me. Let's see. 822,000 minus 774. It gives us 48,000. 774 is in your old equipment, right? Which you had for the whole year. 48,000. Oh, 10 too many. 48,000. 48,000 is then our new equipment, right? So let's do our calculation. 48,000 and policy says 15% on cost. So this one is 15 over 100 times 12 over 12. Which here, so you can give me the answer. Oh, we must ask our students here in front of us to give us the answers. 15 over 100. Let's count the months quickly. July, which was bought on the 31st of July. So we have August, September, October, November, December, January, and February. So it's 7 months. Okay, so let's do the calculation. 7 times 15 gives us 16,100. And then 48,000 times 15 times 7 divided by 12. It's 4,200. Now I must take, let me add up on top here as well. 15,600 plus 145,200 gives me 160,800. And down here, I'm taking these two as well. 116,100 plus 4,200. It gives me 120,300. So 160,800 plus 120,300 gives us 281,100 as our final answer, right? I'm just going to take this away here. And that's what your answer should be. Take a second to correct it quickly. Any questions, Mr. Taylor? Okay. Seems like we have a challenge to get the questions to us. Remember to put the questions in the chat box for us because it's difficult for us to see the hands and to pick up on the hands. So chat box your questions for us and then we will read it and then answer on it, respond on it.
Mayor Andrews, we have 2 hands from Cedar and the other colleague is Musitla. Can they ask their questions in that order? Maria Stahl, number 3, you are recognized?
Yes, you may go ahead.
Good day, Mayor Andrews.
Good day, sir.
Yes, we have a problem here in Temusen. We can't see clearly the package while you are writing. We can't see what you are writing there. So the problem is the quality.
You can't see the writing.
No, the quality. The quality of the pictures, yes.
The quality of the picture.
Yes.
Okay, it's not the color of the pen or something.
Yeah, I think it's a pen or black pen or something.
Is the red better?
Oh, use black, man.
Use black.
Yes.
We'll try the black one for the next question.
Okay, yeah, you can use the black after this question.
Okay,
thanks.
thank you, sir.
All
Okay.
right.
Mirabel, another question?
We have hands from Masita, Maria Stahl. I don't know whether Cedar is a new hand or is the old one, and Michaela. In that order, please. Maria Stahl, can you pose a question? If it is a question, if it's an old hand, please lower it.
Angiboni hayi. Angiboni.
Colleagues, can you close your cameras, please, and mute your speakers? The kids are making a lot of noise.
Ma'am, I can see you, ma'am. You can't even understand me.
Okay. Okay. You can mute your mic again. Let's continue. And cameras, please. Switch off your cameras, please. Okay.
Leonida, it's Mokwati here.
Yes, sir. Yes, Mr.
Your screen was too light, ne? So majority of the school couldn't see. They could not see. As a result, they couldn't follow properly because that screen, when you write there, it was too light.
Okay, so we must
Yes,
move to the
if you-
darker. We'll see if we can.
Hello, ma'am.
check what
I
you
just
can
wanted
see,
to
Mokwati.
alert you that we are African school, so we cannot understand some of the words you're talking. So can you please translate, please?
We will make another video available with the Afrikaans. Afrikaans in the time will not allow us to translate in English and Afrikaans, but we will make another video available for English and for the Afrikaans. Okay, let's continue. I'm going to, with the income statement, 1.2.3, complete the following. Statement of comprehensive income the year ended 28 February. I always advise the very first thing that you do is to open your accounts. So you go to your income statement, you see I already have commission income. Can you just go down? I start with the format of the income statement. Sales, the figure was given to you. Cost of sales, gross profit. You didn't have to do anything there. Commission income was also printed for you, and then rent income is your first one. So I always advise, go to your adjustment trial balance, and then you transfer all your figures onto your income statement. That's the first thing that I want you to do. You will get the mark for that figure, and if you then successfully add or subtract, you get the mark there as well. So I want you to take all the figures from the pre-adjustment trial balance and transfer it to your income statement. So I have cost of sales is there, salaries and wages. There's a question mark, which means it will be a balancing figure. Then we have commission income. It's already printed for us. I have rent income, which I've written in for myself. And then we have audit fees. Audit fees, there's my audit fees, 155,200. Give yourself a mark. Then I have director's fees, 2,115,000. Then I have sundry expenses. The figure is already printed for me. On your answer books, we have bad debts. Open your bracket, 16,200. Depreciation, remember, it comes from the previous question. What was it again? 281,100. As soon as you calculate on that side, in the first 1.1, 1.2, then bring it immediately over to your income statement. Otherwise, you will forget about it. Remember, we also have profit on sale of asset. And that profit we calculate at 3,100. And by putting all these figures, I can already have 1, 2, 3, 4, 5, 6 marks that I've gained without doing anything, right? Those little tricks, you must learn those ones. Interest on fixed deposit, question mark, and then asset disposal, we dealt with it, right? Now I'm going to deal with the adjustments one by one. Number one, adjustment number one, we are not fully done with that one. I'm going to put that one somewhere for us. This one will lead us to closing trading stock deficit or trading stock surplus, right? Or you want us to deal with that quickly? Let's deal with it. I'm going to go to my other board on that side. Bullet number one said we had trading stock to the value of 2,774,800. Then we calculated the closing stock because it said it was excluded, right? So it was, I think, 121,000. Can you remember the amount? Let me check quickly. It was a 121,210. So that is my closing stock, right? Let's add up quickly. 2,774,800 plus 121,210. It gives 2,896,010. Now I'm going to my balance sheet section and I'm looking for trading stock. Trading stock is 2 million. Just put it here. 2 million. According to the pre-adjustment trial balance, 969,800. I can see this one more than that one. So it will lead me to a trading stock deficit. So 2,969,800 minus 2,896,010. It gives me 73,790. And that leads me to a trading stock deficit. And this I'm going to take over to my income statement under my expenses. 73,790. That is trading stock deficit. Okay, just over it again. We were given this 2,774,800 as a stock on hand. We calculated the closing stock in question number 1.2. We add that closing stock and that brings us to 2,896,010 rands, which is my total closing stock, which will then have to go to my balance sheet, right? You must remember that. This is the stock that according to my general ledger that I have, but it does not take into stolen items, damaged items. So when we do a physical stock taking, we actually verifying the stock on hand that we have. The stock on hand that we have is 2,896,000 rands, and that leaves us to the deficit of 73,790. 3,790. Okay, that was your bullet number 1. Bullet number 2, we dealt with the asset, and we have the profit on the sale of the asset of 3,100, and then we have depreciation from the previous question to 81,100. For this one, we give what we call a method mark if you bring your wrong answer from that side onto your income statement. So remember, once you've calculated, bring it over immediately. If you see asset disposal in the income statement, it will always be at a profit or a loss. If asset disposal is in a cash flow statement, it will be at book value. Okay. Number 3, the auditors are owed a further 38,000 for the current financial year. What does the matching concept say? If it belongs, we add. So what must we do with that amount? We must add. So let's add plus 38,800. Let's add the 2. Okay, let's hold on quickly. Plus 38,800 gives us then 194,000. Questions on repeating at the end of this session. Once I've explained all the adjustments, I will project the full memo, then we can quickly just run through it. Okay, so just make a little asterisk where you want to see again, and then I will go over the whole memo with you quickly again before we hand over for the next question. Okay. We received 9,000 from the insolvent estate of debtor Billy Kroon. His estate paid 80 cents to the rand of his balance. This money received was recorded. The balance of his account must still be written off, which means the 9,000 was already recorded, which is the 80 cents, right? We now need to calculate the 20 cents. What must we do? Divide by what we have times what we want. Let's do it quickly. So 9,000 is equal to 80. Divide by what you have times what you want. What do we want? 20%. Sorry, 20 rands. 20 rands of the 1 rand that he, or 20 rands of 20 cents of the 1 rand that he owes us. So 9,000 divided by 80 times 20. And it gives us 2,250. This is then the amount that must be written off as bad debts. Let's do that. Bad debts plus 2,250. Okay, let's add 16,200 plus 2,250 gives me 18,450. Okay. Provision for bad debts must be increased to 25,720. That takes me back to my pre-adjustment trial balance. I can see what was provision for bad debts previously. And I already see the words increase. Because it increases, it tells me already you don't have a choice. It must go to the expenses, right? Sometimes we can accept it under the income or the expenses, but this one tells me clearly increase, which means no choice. Go to put it there. Yeah. Yeah, 2. No, 1. It says to me adjusted to 25,720. You have the 2 figures. What is the first thing you have to do? Calculate the difference. 25,720 minus 21,020, and it gives me 4,700. And like I said, the word says increase. The minute it goes up, It means it's more than what we lost last year. It must go to your expenses, right? So let's take it to our expenses. 4,700. And this is, remember, provision for bad debts adjustment. Don't forget to show your figures in brackets, right? I don't always have space to put mine in brackets, but you must put yours in brackets, right? 4,700, and that's how we calculated that amount. Director's fees. The minute you see director's fees, you think of a director in terms of months, right? You see director 1, you see 12 months. You see director 2, you see another 12 months. As the information tells you. They say the company has 2 directors. Then I make 1, 2. 1, 2 directors. The company has 2 directors who were appointed in 2019. A third director was appointed on 1 October 2022. That's in this financial. Let's count quickly how many months? October, November, December, January, February. So it's 5 months. This one, 5 months, right? The directors all earn the same monthly fee. Directors' fees paid during the financial year have been recorded. So director 1 received 12. They say, but 1 director has already been paid for March and April. So how many months did 1 director get? 14 months, right? So then you add all the months. 12 plus 14 plus 5 gives me 31. And remember, they all earn. So you get 2,015,000 and you divide it by 31. Okay. Check my figure there. 2015 zeros. Okay. 2015 divide by 31 and it gives me 65,000. And remember, this 1 director received for 14 months. He was only supposed to receive for 12. 2 months was paid in advance. So I'm going to times it by 2 and it will give me 130,000, right? So I need to subtract that 130,000 because March and April is not part of this accounting period. So minus 130,000. Okay. So 2,015,000 minus 130,000 gives us 1,885,000. Okay. Now, includes the rent for March 2023, 1 month in advance, right? Received from the tenant. The monthly rent was increased by 1,170 on the 1st of January 2023. Now, if it wasn't for that 1,170, all I could do was say divide by 13. Now I can't do that because of that, right? So what must I do? Remove the problems. How many months of the increase we have? We have January, we have February, and we have March, right? So I take that 1,170 times 3, and it gives me 1,170 times 3. It gives me 3,510. Now my rent currently is 89,700. They say the rent was increased. So I'm going to subtract that amount, right? And then once I've subtracted it, I can then divide it by 13, right? So let's do that. 89,700 minus 510 divided by 13. It gives me 6,630. Remember, it was increased with 1,107. So I must put that back again. So plus 1,170, it gives us 7,800. This 7,800 must then be subtracted from your rent. 89,700 minus 7,800 gives me 81,900. Okay, are you with me so far? We all loan Pearl Bank. Interest on the loan capitalized has not been recorded. Capitalized means it's added. Fixed monthly repayments, including interest, have been paid and correctly recorded for the financial year. Interest on the loan amounts to 60% of the monthly repayments. Okay, so we have to find the monthly repayments. Let's find the loan again in our pre-adjustment trial balance. It's the first one. The loan in 2022, the loan was 690,000. In 2024, the loan is now 524,400. So calculate the difference between the two for me. 690,000 minus 504,400. It gives us 165,600. This is now the total repayments during the year, right? And what did they say to us? They said to us 60% of the repayments. Interest on the loan amounts to 60% of the monthly repayments. So I must calculate 60% amount to get my interest on the loan. So let's do that. 165,600 times 60%, and it gives me 99,360. Okay. Mr. Taylor can just move up a little. Everything out of my way here that I have in front of me. So write your loan amount, 99,360, and that's how I got it. The 2022 loan amount minus 2023 loan amount gives me 165,600 times 60% gives me 99,360. Okay. Income tax for the year was calculated to be 858,140. So that amount was given to you, right? Okay. So now all that's left to do is to balance our figures, right? Interest income would also be a balancing figure, and then we will move our way up. I'm going to erase everything now, and then I'll show us the memo on the board. I'll quickly talk you through it. Mr. Jan? Just the income statement. Okay, while we're waiting to project it quickly, we will take some questions. Any questions?
Bengu, can you go on? You have raised your hand. Is there any question?
Ma'am, we have
Any questions?
For audit fees.
Yes, madam?
For the audit fees, ma'am.
You don't understand audit fees, man.
You don't understand the audit fees.
Yes, ma'am.
Okay. The audit fees, they said to us the auditors are owed a further 38,800 for the current financial year. What I said about the matching concept. The accounting period is from the 1st of March 2022 to the end of February 28 February 2020. So your goal is to add all amounts that's due in this accounting period. And if you read what they say about the auditors, they tell you that they are owed, which means we owe the auditors. Who are the auditors? They are the people that come from outside to come and audit our books, right? So we have to pay them that money. So we still owe them that money. And they clearly state for the current financial year, 38,800. So all we had to do was add that 38,800 so that we could make sure that we include all expenses and income incurred in this period. I always say, to understand the matching concept, you think of yourself of making a profit. You're selling sweets at school. Now you say you made a profit of 200. But as you walk home with the 200 in your pocket, planning to do something with this 200, then comes your one friend and said, I buy the plastic packets for the thing. You owe me 20 rands. Now you're losing 20 rands of that money. You get home, you're thinking you're going to go to the movies. Your mom says, no, you owe me 50 rands because I gave you 50 rands for that sweets. There you're losing another 50 rands. So your two is getting less and less because you did not take into account all your expenses and the incomes that you incurred in this accounting period. So we want our profit or loss to be as realistic as possible. And therefore, you add that audit fees so that it can be part of be subtracted and we can get the correct net profit for this year. They can either give you a percentage or they give it to you like this, right? Okay, let's quickly run through the memo. There's the rent income, the 7,800 and now 81,000 there. There's the profit on the sale of the asset, the 3,100. You add all three amounts to get to this 170,900. Don't forget this 85,900 that was already printed on the answer book. Then you have your gross operating income. It is this 7,650,000 plus your 170,900 gives you this answer of 7,800 and 20,900, right? Your operating expenses, salaries and wages, this is a balancing figure. So we first have to add and subtract before we can see that figure, right? So audit fees, there's your 155,200 plus your 2,800, which gives us 194,000, right? Directors, there's your 130,000 and it gives you 1,885,000. Please remember to switch off your cameras, please. Then we have your sundry account, sundry expenses that was given to us. There we have bad debts. I showed you how to calculate that 250, which gave us the 18,450. Depreciation, you saw how we calculated and got to that amount. Trading stock deficit, there's the 70,790, and I showed you how to calculate that figure as well. Provision for bad debts adjustment, we also saw how to calculate that 4,600 there. So then you add up all your income and your expenses. Can we just go down quickly? You'll have to go to the bottom, right to the bottom. Let's go down to the end. You see your net profit after tax given to you, right? Your income tax was also given to you. So now you must work your way back up to be able to get to your profit, right? You can get your balancing figure for your salaries and wages. So this 2,02,500 rands was given to you. It was printed on the answer sheet. This income tax 858,140 was given to you in adjustment number 9. So add these two and it will give you 2,860,640. So the net profit after tax plus taxation gives you net profit before tax, right? We calculated this 99,360. If you work your way back up, you do the opposite of what you come down. So you must add this amount to get to this amount, right? So you take your 2,860,640 plus 99,360 and it will give you 2,960,000, right? Yeah, that's a lot of things. Eh? Okay. Oh, they were given. We were given this operating expenses. So add up all your expenses. Your 194,000, your 1,885,000, your 219,760 plus 18,450 plus 281,100. 23,790 plus 4,700. Your answer that you get minus this one, and it will give you this 2,218,100. Just to say that again, you add all these figures, your expenses that you have, right? Then you subtract it from your printed figure there, and it gives you your salaries and wages, right? Okay. Now we have that 4,894,900. Now you must work with me here. You have your operating expenses. So your gross operating income minus your operating expenses, right? So take your 7,820,900 minus your 4,894,900 and it gives you 2,926,000, right? Then you can take your 2,926,000 minus this one and it will give you that 34,000 right there. Remember, you're doing the opposite now, right? To get your 34,000, your final balancing figure. Any questions? Okay, we don't see anything. Before I move to the next part of the question, one thing that I didn't see here is consumable stores on hand. Remember, consumable stores on hand, there's two ways of dealing with it. It's either you're given the consumable stores on hand, then you have to subtract consumable stores on hand because that's the opening balance for the next term, or they tell you that this is the consumable stores used. If you see the word use, do nothing, just to the final figure, because when you see use, you want to make complicated calculations and it's not necessary. You want the amount of consumable stores used for this particular financial year. So if they say to you, this is the amount used, final figure, nothing else, right? Also, provision for bad debts adjustment. I've seen when I modeled, a lot of you put that in the March test, the final, you subtract the two amounts given and then you put the wrong amount in the final column, right? So just be mindful of that. Remember, this year's provision for bad debts goes straight to the balance sheet.
Okay. Happy Kimomandi Toti. Oh, Kimomandi Toti.
Until when comes later. Until there's an exist. Telephone what? That.
Yeah, ang kapalakap do. Yeah, kakaka. Little bit of some. Or sabat.
Did you get your food? No. I can't say that. That's a question. And don't make noise like two of it.
Ito ay, di nag-outlook sa.
Kebanyakan besar. Kabupuji. Bila nunggu lepas siswa lepas. Oh, I mean, we can do you.
Ma'am, we can't hear you.
Yeah.
Ma'am, we can't hear, ma'am.
Hear you. The sound is not okay.
Guys, we are busy. Guys. Ma'am, quality.
Hey, 11.
Can you hear me now?
Yes, ma'am.
Yes, ma'am.
Okay.
But we can't see, ma'am.
You can't see now.
Yeah.
Your quality is too low.
Learners from all
I
the
know
schools, can they switch off their cameras because we are looking at you, we are not looking at the presentation. Switch off the cameras, all learners switch off the cameras. You are visible enough. Hey.
How we find out? Okay. Thank you, Rebecca, for the assistance there. Plus 160,000. Plus 60,860. And it gives us 764,140. Now you can see our cash and cash equivalents is missing, and we did not get any information on that, right? So that we have this figure above here. So we can take this figure minus, and it will give us this answer. So let's do it quickly together. 7,605,150 minus 2,896,010 minus 764,140, and it gives us 6,552,000. Let's check it again. Plus 764,140. Now somewhere I calculated wrong. I can see it can't be, no? Let's calculate it again.
Oh, ma'am, you can see.
7,605,150 minus 2,896,010 minus 7,641,140. Okay, that looks better. 3,945,000. And you see how I made a mistake now with 6 million there. 6 million cannot possibly be the right answer. But obviously I pressed something wrong on a calculator. And that's exactly what you also do in the exam. Look at your answer and see if it's a reasonable answer that can be used. And even go back and just check to see if
Ma'am, your quality is
this 7,605,150. If not, then there's something wrong. The minute I saw that, I could see a 2 and a 6 will give me an 8. It can't possibly be right. So I made a mistake there, right? So in the same mistakes you guys make in the exam, and then we can't understand. You have the right figures, but the final answer is wrong. So just make sure that your answer is reasonable. If I can just go back to these figures. Also for our teachers, if this one is supposed to be a minus, then it must be a minus. This one must be a minus. We can't now make this one a plus and this one a plus and then still get a mark. So make sure that you understand when to minus, when to plus. Okay, I think that brings us to the end of the first question. Questions quickly on this question. While Mr. Taylor is setting up, we're going to try. We're going to go off the camera and go on to the visualizer now. So Mr. James Taylor is going to work a little bit different from just to see which way works best for us, right? So hopefully it will help a little bit. Any questions that we have?
Can we get Helbron with a question, please?
Hello?
Yes, sir.
Can you hear me?
I can.
Dink as ek kan my hoor.
Ons kan hoor,
Hi,
meneer.
Miss, can you hear? I would just like to ask, can you please redo this current asset portion? We couldn't hear with the noise.
You couldn't hear.
Yes, we couldn't hear with the noise going on with all the people and their mics not being muted. They were in the screen and we couldn't hear from here.
Okay, let's start again.
Yes, ma'am, I agree.
I'm just going to explain. Is it still on the screen?
Yes, ma'am.
Okay.
But ma'am, we
Remember
can't see
the
clearly.
inventory? You can't see clearly.
Yes,
You will
ma'am.
project the memo quickly.
Okay, ma'am.
Okay. Remember, this 2,774,800 we were given in the question, right? Then we calculated the 121,210 as the stock on hand. We had to add the two. And the total stock on hand, according to our statement, is 2,801,010. This is then your go to your balance sheet, your final stock for this particular year. Then we have 645,200. This is your debtors control amount. Adjustment car balance. Can we ask people to mute their mics again, please? This is your minus your extra bad debts. Remember the Kroon paid 9,000, but there was still an amount outstanding that we calculated in the income statement. So that's the bad debts must be subtracted because it reduces the amount of the debtors control. Then provision bad debts must also be subtracted because that one also reduces it. Your debtors control minus provision for bad debts. Trade debtors according to the format of the note, right? Then your directors' fees. These directors, we pay them already in advance. Say, for example, they now not going, they resign or they're not working for us or something happens, then they owe us that money. That's why we're adding it as a receivable, right? Our income tax, according to our pre-adjustment trial balance, we have already paid 875,000. But according to the income statement, the tax for the year is 858,150. So when we calculate the difference between the two, it gave us 16,860. And we can see 875 is more than 858, which means we more than what we owe to SARS. So that is then a receivable for us, right? And that is 16,860. To add and subtract all these figures, it gives us 764,140. There was no information on cash and cash equivalents. So this was the only figure that was missing. We were given this balance of current assets, We had to calculate this one, calculate this one. So to get to this balancing figure, we said 7,605,150 minus 2,896,010 rands minus 764,140, and that's how we got to 3,945,000. And that was then 11 marks for you. And that brings us to the end of the first question on income statement, current assets, depreciation, and a bit of stock. And that's exactly the type of question you can see in our question paper next week. Any other questions that we have?
We have a hand from Marias Dal and then Mandisa.
Okay.
Yeah. Yep.
Ask your question.
Mr. Please explain trade and other receivables.
Trade and other receivables.
Yes, ma'am.
Okay. Remember, you must know the format of your note, trade and other receivables. First part says debtors control. Then it says minus your provision for bad debts, which gives you your net trade debtors, right?
Yes, ma'am.
What else comes next?
We have Marias Dal and lastly Leopola. Bokang, can you switch off your camera, please?
Okay.
Marias Dal, do you have any questions? Marias Dal.
Becca, in the interest of time, we're going to step off this question now so that we can mark the other one.
Please.
Okay. All right.
We are okay, ma'am.
We're asking for just 5 minutes break. Let's take a 5-minute break. Then we will be back at 1:45. We will just take a 5 minutes and then we'll back at 1:45. Thank you, guys.
Oh, we used to see. Yeah.
Yeah. Yeah, I was going to do that.
Hi.
We going to do the big to do it on you understand that you understand what we were saying?
Yes. I understand what you're saying. Let's see how
Yeah. Yeah, now you see what we had in mind. We wanted to make it like a classroom in front of it. But why can't we meet the people come out? It's too easy. So you would prefer what you must either go on YouTube. You must either go on YouTube.
Yeah, we will discuss after.
So they will see, but I see the paper now. You see the paper. So it's going to be a see. Yes. Okay. I will ready to go. If I switch on my mic, I can talk. So I just want to introduce you. Yeah. No.
Morning, ma'am.
Why don't I see a recording here? Good afternoon. We are back again. Just want to introduce Mr. James Taylor. He's the chief marker of paper 1. I think there's nobody better qualified to tell us a little bit about paper 1 than Mr. James. So listen carefully to everything that he has to say to you. Please, we ask again all mics to be switched off. Cameras to be muted. It makes it very difficult for the presenter when there's a lot of noise behind us.
Just that Chilena start stepping us.
Ma'am, we can't hear you at all, ma'am.
Okay, but you need to switch off your mics. Make sure there's no noise around you on the outside. That's better. We can hear it. Sounds clearer.
We can't hear anything. Go
Right, good afternoon, everyone. Can everybody hear me? I hope so. We can switch off all the microphones and all the cameras so that you can just see the visualizer, the page that I'm showing.
Mr. James
All right.
Tyler, welcome to the visual meeting.
Please switch off your mics. Thank you. All right, that seems better. All right, we're going to look at also question 1, which is your financial statements. There's different ways in which they can ask it. The one is they ask a simple income statement and then a part of the balance sheet. The other one is only an income statement or only a balance sheet. And in this question, you will see that they asked us to calculate the correct net profit after tax. And then they asked the full balance sheet. So it's very important before you start the question, always make sure that you know what they are asking. When we get to that part, we will cover that. At first, there's the fixed assets we have to do before we can start with the balance sheet. So let's look at the information. They say it relates to DBN Limited and they sell household products. The financial year ended on February 2024. Referred to information A. Now we will see that information A is our fixed assets note. If you look at that, they say refer to information A, so that's our fixed asset note. The bookkeeper has recorded all the entries regarding fixed assets in the books. Complete the amounts denoted by 1 to 3 in the fixed asset note. So let's look at our figures that they want us to calculate. The first one they want us to calculate is calculate the cost price of the buildings at the beginning of the year. Now remember, they gave us, if you look at the note, I just want to put it again here. If you look at the note, they gave us the final figure. And they said we sold buildings for 420,000. That means at the beginning of the year, we had more than the 9.21. So that means we have to add those two figures. So we have to add 9421, 300, and we add the 420,000. And that will give us 9841, 300. So that was an easy 2 marks. Just add. Normally, sometimes it will maybe give you the opening balance, closing balance, and then you can just get the difference for the additions for the disposal. Right now, let's look at vehicles. We look at vehicles, they want us to depreciation at the end of the year. You see, there was no disposal. So that's quite like the grade 10 question. You must calculate the depreciation. Now remember, as Andrew just showed you, you need to calculate the old vehicles, the depreciation for the old vehicles, as well as for the new one. I always tell my learners the easier one to do is the new one. Let's start with the new one. The new one, you see that the purchases was 260,000. And they say that the depreciation is 15% per year on the cost price. So that's easy, we multiply by 15%. And then we know we didn't have it for the whole year. They say that the new vehicle was bought on the 1st of October. So that is we had for October, November, December, January, and February. We had it for 5 months. My mic fell off.
Sir,
So yes, is it better now?
yes, sir. Why did you add
Yes.
the disposal and the carrying value for buildings?
Remember, disposal means we sold some of our buildings.
Yes,
So that
sir.
means we had more buildings at the beginning of the year. So we work backwards. So at the end of the year, we had 9421. We sold
Yes.
421. That means we had 9,841 at the beginning of the year.
Okay.
Does that make sense?
Oh, yes, at the beginning.
Okay.
Oh, thank you,
If it
sir.
was if it was in addition, we would subtract it.
Oh,
All right.
yes, sir.
Okay. So let's look at the vehicles. We said the new one, that's the easy one, 260,000 times 15%. But we must remember we didn't have it for the whole year. We only bought it on the 1st of October. So that means we had it for October, November, December, January, and February. Only had it for 5 months. So we multiply that by 5 over 12. And that will give you 16,250. So that's the easy one. That's the easy one. Now the old vehicles we must check. Remember that we must calculate the cost price. Now if we look at the note, they don't give us a cost price of the old vehicles, but they give us the closing price, the closing balance and the purchases. So we can calculate the old cost price. Remember the 786 minus the 260 give us the old vehicles. So let's write it down. So the 786,000 minus, here you see the difference between the two, minus the 260,000 gives us 526,000. And those vehicles we had for the whole year. So we multiply that by 15% for the whole year. And that gives us 78,900. Now remember, Ms. Andrews also told you to look for the 1 rand rule. You see the carrying value is 249. So that's much less than that. So that's no problem. So our depreciation will now be the total of those two figures, which gives us 95,100. Right. Now let's look at the third one. The third one, those who have already had classes with me will remember, I always talk about this figure as step 6 in our asset register. So let me quickly show you an easy method to do that one. They say to you, just get the question, sorry. They say, extract from the fixed asset register in respect of equipment sold. So we want to know what is the carrying value of that equipment that we sold? And the easiest to do that is to do our asset register. So we write down a column where we say cost, depreciation, accumulated depreciation, and carrying value. They say the cost price of this equipment was 80,000. And they say the carrying value at the end of the year was 57,600. Our carrying value was 57,600, but that was on 28 February. Normally, they will give us the accumulated depreciation, and then we have to calculate the carrying value. Here, they gave us the carrying value, so we can calculate the accumulated depreciation. So if we take the 80,000 and we minus 57,600, we get the accumulated depreciation of 22,400. Now, when did we sell this equipment? We only sold it on the 31st of May. So we need to complete our table until 31st of May. Our cost price is still 80,000. And depreciation on equipment is 20% on the diminishing balance sheet. So now we have the carrying value. So we take the 57,600. We multiply by 20% because it's 20% on the diminishing balance. And we add it for March, April, and May for only 3 months. We add that. So if we do that calculation, we get 2,880. So depreciation, 2,880. Our accumulated depreciation is 25,280. And our carrying value is 54,720. When we do asset disposal, you will remember we have 5 steps. The first step, we had to calculate our depreciation. So we had to get our depreciation up to date. The second step, we took out 80,000 to our asset disposal account. The third step, we took out accumulated depreciation. There is a figure for the accumulated depreciation. The fourth step is the selling. They say it was sold for 53,000. Now you can see easy. If they say we sold it for 53,000 and the value is 54, we made a loss because we received less than it was actually worth. If it was sold for 56,000, we would make a profit. But this, they only wanted us to calculate the carrying value. And that's where I say step 4 is your selling. Step 5 is calculate your profit and loss. And then I use step 6 as this figure. So my carrying value of the vehicle, of the equipment that we sold, is 54,000. So whenever you get anything to do with asset disposal, do this table for either the equipment or the vehicle that was sold, and then you get all the figures that you need. And if you do your asset disposal account, let me just quickly do the asset disposal here. We have the cost price, our equipment, which was 80,000. We have the accumulated depreciation, which is 25,280. We have they say it was sold for 53. Let's say it was sold on cash for 53,000. And then we see we made a loss. So it's easy if you have this table to calculate your loss or even the carrying value of the equipment that was sold. So let's stop here. Just ask if there's any questions about this first part. No questions? All right. So let's look. It seems it's Friday. Everyone wants to go and have some weekend. Let's look at the rest of the question. Now it's very important. We see here that they ask us to calculate the correct net profit after tax. So they don't want us to do the income statement. They just want us to do a calculation. And they want us to calculate how to do the balance sheet. So you will see, if we look at the balance sheet, I've already filled in everything that I know. I know there must be inventory, there must be trade and other receivables. Your share capital must be there, our loan for the non-current liabilities, and trade and other payables. We're going to do this question as a whole. We're not going to do the one part and first calculate the profit and then we're going to do the balance sheet. We're going to use the information that they give us and we put it in the correct place from the beginning so that we don't have to read through the question 2 or 3 times. Luckily now, we saw that our fixed assets was already filled in, the investment was filled in, our cash and cash equivalents was filled in. So now, all the information that they give us. They give us, if we look at the information they give us balances. So we start by putting those balances at the correct places. The fixed assets, as we said, was already filled in, so we don't have to do anything with that. Our ordinary share capital is a question mark. So we do our question, we leave it like that. The retained income, also a question mark. We can't fill in anything there. The fixed deposit, the 425,000 was filled in. The trading stock is our inventory. So our inventory, we know we must fill in the 1064,200. So we fill that in. Our net trade debtors is our trade and other receivables. We fill that in brackets 744,900. Our creditors control is our trade and other payables, the 518,950. 518,950. And our SARS income tax. I like to do it whenever we see SARS. I like to do a T account. I like to draw a T account. So let's do it. Our SARS account. Remember, that is provisional payment, so that's your balance on the debit side. Our balance is 322,800. That's all we have at this stage. Also, if we look at our calculation of our net tax, we have our net profit before tax, and we have to subtract our income tax. All right. Now remember, this 322,000 was our provisional tax. So we can't put that in our income statement. That's only what we have paid. So we will see what else, what's the other information they gave us. Now, we filled in all our balances. Sorry, we filled in all the balances. Now they say the bookkeeper has calculated the net profit before tax as 1,150,000. And the pre-adjustment balances to be adjusted. Now they give us 4 figures and they say those figures must be adjusted. We saw when we did the pre-marking that a lot of learners use that figures in their calculation of the net profit. Remember, we must only use the adjustment figures. So we're not going to use this in the calculation, only to calculate what was in advance or in arrears, and then that's the adjustment figure is the only thing that will influence our net profit. Now, very important, just before we look at that, remember when we do a calculation like this, if we increase an expense, we are used to say, let's say audit fees was in arrears and we added 20,000. So we are used to adding that 20,000 because it was the matching principle. We have to add that. Then a lot of learners add it here. But remember, if we increase our expenses, it means our profit will decrease. Therefore, we will subtract it from our profit. If our expenses are paid in advance, that means we decrease our expenses, so our profits will increase. The income works with your profit. If your income increases, you can increase your profit, and if the income decreases, you can decrease your profit. So let's look at the information they give us. The first one, they say, audit fees of 45,600 was still owing. So we still owe that. That means we still have to add So the audit fees, remember, we don't add the figure that they gave us, the 144,000. We only do the adjustment. And that adjustment was 45,600. So if we increase our audit fees, if we increase the audit fees, it means our profit will decrease. Therefore, we subtract the 45,600. The next one, a donation of 100 blankets. Let's do this. A donation of 100 blankets was made to a children's hospital, but the donation has not been recorded. So we know if you made a donation, we have to add an expense. So we put in the donation. We know that that will decrease our profit. Now, what do they say? They say that business uses a weighted average. So weighted average, it's easy. In paper one, when you do inventory, it will normally be an easy calculation. We have our total cost of our blankets, and we have the number of blankets that we bought, 1,500. So we can calculate the average price. So if we take the 603,000 and we divide it by 1,500, we get an average price of 402 rand, or 402 rand. And now they say they donated 100 blankets. So in other words, if we take the 100 blankets and we multiply that by the 402, we get 40,200. 40,200. Now a donation is an expense. So what happens to my profit? It will decrease. So we have to subtract it from the net profit. Number 3, rent was increased by 1,300 per month from the 1st of January. It's the same one as the one that we just did in the previous question. So I just want to get a piece of paper so that we can look at that one. Let's look at the rent. They say it was increased by 1,300 rand. So let's first calculate how many months was that? From the 1st of January. And the rent for the period 1st of March to the end of January was received. So that means we only received 1 month's increased rent. That was only the 1 month. So if we look at our rent income, it was 287,300. So we have to subtract the 287,300. We subtract that 1,300. So we get 286,000. And now remember, that was only for 11 months. So if we divide that by 11, we get 26,000. 26,000. And now we must remember, it increased by 1,300. Therefore, 27,300 was the month that they still owed us. Sorry, I just forgot about one thing. I just want to quickly show you something. We say here, the audit fees was in arrears. It means it is an accrued expense. And the accrued expense must be added to our payables. So if we take our trade and other payables, we add that 45,600. That is our audit fees. So we add that. And the donation, that 40,200 was at an influence on our inventory. We made a donation, so our inventory, we have to subtract the 40,200. If we don't do it immediately, we will forget. When we get to the balance sheet, we will forget that we have to still add those figures. All right, sorry about that. Let's quickly go back to the rent income. Now remember, this 27,300 was for February. So it was in arrears. So that means our rent income, we have to add the 27,300. And if we add it to our income, that means our profit will increase. And that's accrued income. And accrued income is part of my trade and other receivables. So my trade and other receivables, I will add the 27,300. That is our rent income. All right. Then number 4.
Say.
The company, this, yes.
Say you are being fast.
Am I doing? What do you want us to do again?
What I say? You must speak slowly. Speak slowly, sir. Please.
Okay, I will try. I will
Okay.
try. All right, let's look at the number 4. The company had one director. What did Mrs. Andrews just tell us? We must look at the directors. This one is a little bit more difficult than the one that she did. In her case, we just counted the number of months and then we could see that. But here's something else. They say the company had one director, Jenny, at the beginning of the year. Jenny had been paid in advance for 2 months. So how many months did Jenny receive her fees? Remember? She had the 12 months plus the 2 months in advance. That means she received 14 months. Then they say a second director, Frank, in the 1st of December. So he was only, let's just write that. So Frank, he was on the 1st of December. So he only had been working there for 3 months. But they say his fee is 20% lower than that of Jenny, and he received all the fees. So here's the one where they usually tell you that the rent income was increased by 10% or decreased by 10%. So this is the same example. So remember, we don't know what their fees were. So Jenny had that 14, I do it like this. I say 14 months. She received 100% of her fee. But we don't know what her fee was. So her fee was an X. You all understand that? We don't know she received 100% of what she was supposed to receive. But Frank, he had to receive 3 months, but he didn't get 100% the same as her. What did they say? His fee was 20% than that of Jenny. So what percentage did he receive? He received 3 months. 20% less than the 100% means he received 80% of what the fee was. So now if you take your calculator and you put in 14 times 100% times 1, you get 14x. And if you take your calculator again and you put in 3 times 80%, that will give you 2,4 times 1. That means that is 2,4x. So if we add those two, we get 16,4x. All right. So just again, Jenny received 14 months. We don't know how much, so that's why it's an X, and she received her full salary. Frank only receives 80% of that salary. So that gives you 2,4 if you put it in your calculator. So that's 16,4x is, if you look at the 852, 800. So now we can get the value of x. Now remember the 852, 800. Please mute your.
So we can't hear you, sir.
You must just mute your microphones. So the 852, 800 divided by 16,4 gives you 52,000. So that was her monthly director's fees. And they say she received 2 months in advance. So we multiply that by 2, and that gives us 104,000. So the director's fees was in advance 104,000. So the director's fees, we know we must put it 4,000. And now remember, that was in advance. So that means our profit will increase because we subtract it from our expenses. We subtract it from our expenses. And the prepaid expense is part of our trade and other receivables. So our trade and other receivables, we plus 104,000. 4,000. That is our director's fees. We add 304,000. All right. So now, all right. So that was the 4 adjustments that we had to do. Now let's look at number D. They say the assessment result indicated total income tax for the year at 351,000. So remember we said we have to do our SARS account. Now, income tax. Please, can you mute your microphones? The income tax was 351,000. That was announced.
That's why I'm saying, intercom.
Sir, I really cannot hear you, sir.
We can't hear because everybody's mic is on. So they have to switch off their mics. Otherwise, they won't hear me. All right. So the 351 was what we were. We only paid 322,000. So that means we still owe them 28,000. Our balance will be 28,200. And it's a credit balance. It's a credit balance, which means we owe SARS. And therefore, it will be part of our trade and other payables. We can add it there, but if they ask you the balance sheet, you can rather put it just as an extra entry. SARS income tax. So we will say that was a 351,000 minus the 322,800, which gave us 28,200. And now remember, if we go back to our correct net profit after tax, so if we say the 1150 plus and minus all the adjustments that we did, we get a figure of 1195,500. And now we see that our income tax was 351,000. So remember, we put it in brackets because we want to subtract it. And that gives us a net profit after tax of 844,500. So that part of my question is now complete. Now we only have to do our balance sheet. So let's quickly look at the balance sheet. Yes. All right, let's look at the balance sheet. Further information. They give us a share capital. They give us information on share capital. Let me show you the question. They say on the 1st of March, there was 2,120,000 in issue. We bought back 230,000 shares. At an average, they say the average price of that shares at that stage was R5.90. And we had, at the end of the year, we had 1,890,000 shares. So let's look again at the information. If we do our share capital note, let's fill in what they give us. They say at the beginning we had 2,120,000 shares, but they don't give us the figure. They say we bought back 230,000 at an average price of R5.90. So remember, here we use the average price, R5.90. So 230 times R5.90 gives us 1,357,000. And then they say at the end of the year, we had 1,890,000. So there was no shares issued at the end of the year. But now we have a problem. We don't have the closing figure. We also don't have the opening figure. Now this was actually very easy, because if they say we repurchased at R5.90, it means our average price will always stay the same. So that means this figure will also be at R5.90. And that figure will also be at 90, because if you take it out at an average price, the average stays the same. We don't actually need that figure, but we can fill it in. The 2120 times 590 gives us 12,508,000. Remember that one is a repurchase, so it must be in brackets. So 12,508, and the 1890 times 590 gives us 11,151,000. And that is the figure that we need in our balance sheet, the 11,151. So our ordinary share capital will be 11,151,000. We can say that it was that 1,890,000 times 5 rand 90 to give us the 11,151. Then they say there were no interim dividends, but there was a final dividend declared. Now remember, final dividend means we owe them money. So it must be part of our current liabilities. So we have our shareholders for dividends. The first thing we write down, remember they say we have a final dividend of 25 cents. So we always write that first down. You write that 25 cents, because now if you multiply that by the wrong number of shares, you will at least get your work worth more. But if you don't write the 25 cents and you use the incorrect number of shares, you will get no marks. So what do they say? They say the dividends was declared to all the shares in the share register. That means the 1,890,000 shareholders got their dividends. So we multiply that by 1,890,000. That will give us 472,500. So that is shareholders for dividends. Then they say transfer of a debtor's balance. This is one that a lot of learners get wrong. They say a debtor with a debit balance of 8,400. I like to do this. I say we have debtors control and we have creditors control. We have our debit and our credit balance, and the debit and the credit. So they say a debtor with a debit balance. So that means the 8,400 is now there. So how do we take it from there to my creditors? And remember the debtors control, that is your plus side and that's your minus side, and that's your minus and that is your plus side. So to take it out, we have to minus that from our debtors control. So in our debtors control, our trade and other receivables, we must also subtract 8,400. And now this is the problem that a lot of learners might think or do. They subtract here and then they want to add at the bottom. Now remember, this is a AOL, your normal equation. So if you add to your assets, your liabilities must also add. If you subtract to your assets, your liabilities must subtract. Otherwise, your balance sheet won't balance. So if we look back, if we take it out there, we minus that. If we credit that, so that means in creditors control, we will debit the 8,400. So if we subtract it here at trade and other receivables, in our payables, we must also subtract. Most learners, and I can tell you about 90% of the learners, they minus one and add the other one. It's always the same. And then the last one is a strange one. It's a new one that we haven't seen previously. They give us extract from the loan statement. They give us the opening balance. They give us the repayments, and they give us the closing balance, the 1,104,000. So remember, we start with the closing balance, the 1,004,000. Remember, they already added the interest. So what must we do now? We need to calculate. Let's just look at what they say. They say all entries for the repayments have been made. Expect to maintain the capital repayments made this year during the next financial year. So if we look at the difference between the 1.4 and the 1,004,000, that is a difference of 396,000. Of that 396,000, they say the interest was 168,000. So if we subtract the 168,000, not 86, 168,000. So if we say 396 minus the 168, we get 228,000. So that was our capital part of the loan that we paid during the year. So that means next year we will also pay 228,000. So for our loan, we must subtract the 228,000, and that becomes our. Sorry, I did something wrong now here. Sorry, the loan, we don't even have to do that. Sorry, my mistake. Let's just quickly look at it again. They give us the opening balance of the loan, and they give us a closing balance. So that means we paid off 396,000, and next year we will pay the same again. So that 396 is our short-term loan. So we take that 396, and remember we must also add it to our current liabilities, the short-term loan. Short-term loan is then that 396,000. So the other information they just get, when we did the marking, a lot of learners started with a 1.4 and they added the 168,000, which is not wrong, but then they just subtracted the 1004 and then they didn't get the correct answer. So we just need to know what happened to our loan, the 396, and therefore that is our short-term loan. And then I think we have covered everything. So then we can start to complete our balance sheet. So let's start at the top. We have our inventory. The 1064 minus the 40,200 is 1024. Okay, that one. Our trade and other receivables we can get is 867,800. So now we have all our current assets, all three of them. So if we add them, we get current assets of 3,848 and 20. And then we have our non-current assets, we have our current assets, we can get our total assets, which is 14,225,500. Now you are lucky, your balance sheet will always balance because there will always be a balancing figure. So we know that our total assets and our total equity and liabilities must always be the same. So we can fill in that figure already. All right. We can't fill in the retained income. We can complete our loan. The 1,004,000 minus the 396 gives us 608,000. So that is our non-current liabilities, is 608,000. We can get our trade and other payables. That total is 556,150. So now we can have our total for the current liabilities. If we add all those figures, we get 1,452,850. And now another mistake that we normally see is that the learners put the loan in brackets and they put the current liabilities in brackets. Remember, in your balance sheet, nothing will ever be in brackets. Nothing will ever be in brackets. So you just add, because the heading is equity and liabilities. So you have to add all of those up. So now we still need our shareholders' equity. We have our total minus the 1,452 minus the 608, and that gives us 12,164,650. So remember, that one plus that one plus that one gives us the total. And we add those three, so we can get our shareholders' equity, the total shareholders' equity. We have our share capital. Now we know that the retained income, 13. If we subtract those two, we get 1013,650. Now I want to show you something. Sometimes happens is you get this total maybe as 10 million. So let's say you get the 10 million here, and this figure is 11 million. That is the only time that you will put something in brackets. And then that means your retained income will be in brackets. Or maybe they gave you the figure, the 1452, and you had all those figures, and that total was maybe, let's say you had to calculate your SARS as a balancing figure. Now, if you add those up and you get more than the 1452, let's say you get 1.5 million, then that means your SARS will be a negative figure. That's how you calculate it. Therefore, you will put it in brackets. That's the only time that you put something in brackets. Otherwise, everything will always be a positive figure. All right, and that's the whole question. Now we have time for questions. We have a few minutes for questions.
All right, before questions, James, Mr.
Yes.
Foshe said he must remind teachers to fill their attendance register, the Google form for attendance
Okay.
register.
All the
Yes.
teachers, just remember to fill in the register, please. Thank you, Telu. Are there any questions?
So I was just
Yes.
wondering, like, for us who are in an African school, we had to do this
Yes.
to English. So is there any thing they're gonna like help us with?
Mrs. Andrews said that we will arrange something for an Afrikaans group.
Okay, so thank you very much.
So maybe you can contact me. You can get my number from Ms. Andrews, and then we can speak. Maybe I can help you guys.
Okay, sir. Thank you very much. I will let her know.
Okay. All right. Are there any other questions? Something you want us to quickly look at again?
Amount in David fees, director's fees.
The director's fees. I hear something about director's fees.
Hello, sir. I have a question.
Yes. Yes.
Hello.
I'm listening.
Wait. I have a question.
Yes. You can speak.
Hey, why did you add 1,400,000
On
the
director's fees?
Okay, let's quickly look at the director's fees. I'm going to show it here again. Remember, we said that the director's fees was paid in advance. Am I right? We paid more than the 12 months. We paid for 14 months. So that means our director's fees, the figure is more than it actually should be. They said we paid 852,000. And we were not supposed to pay that because she received 2 months for the next year. And if we calculated the amount per month, it was 52,000. And she was 2 months in advance, so that means 104,000 was paid in advance. So if you think about your expenses, you must subtract that from your expenses. Am I right? Because it's an advance. We agreed for next year, we would have to take it out. You agree?
Yes, sir.
All right, it seems you agree. And then if you take out the expenses, if you decrease your expenses, what happens to your profit? Your profit will increase. Therefore, we add 104,000.
Our profit will
Does it make sense?
Yes, sir.
Hello, sir.
Okay, another question? Yes.
So I have a question. Can you please explain the loan transaction?
The what one?
The loan transaction.
The loan. Okay.
Yes.
Let's quickly look at that. I just want to get the question.
You have command
Let's quickly draw the loan account. let's quickly draw the loan account. Maybe you will. They say the opening balance was 1.4 million. And our closing balance is 1,004,000. All right. And then they say the interest which was capitalized. Remember, the interest is added. 168,000. 168,000.
I'm going to ask the
All right.
question. Ask.
Yes. All right, so we have the interest. So what do we get? Here's our balancing figure, the amount that we paid during the year. And we plus 168,000. We get 1,568. On that side, we have 1,568 minus the 1,004,000. We get 564,000. But what must you remember now about the? That is your interest and your loan. So remember, of that figure, of the 564,000, 168,000 was your interest. So if we subtract that, we get 396,000. That's now the long method. But if you look at your opening balance was 1.4 and your closing balance is 1.4, 1,004,000. If you just subtract those two figures, the 1.4 and the 1,004,000, you also get 396,000. So that means that is your short term. This is what you paid during this year, and they say for next year it will remain the same. Therefore, next year you will also pay 396,000. Normally they give us a 564, and then you have to calculate the interest. Am I right?